This is Horizons Middle East and Africa, our top stories this morning. Asian stocks climb after tech stocks lead Wall Street higher, with the S&P 500 climbing to another record. Gold soars above $4,500 an ounce for the first time on escalating tensions in Venezuela and bets on more Fed cuts next year. And Libya's military chief of staff dies in a jet crash in Turkey. We'll bring you the details later this hour. It's just gone 9 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Burden in for Jemana Basetchi. Happy Christmas Eve if you're celebrating. One more sleep to go. And of course, as we look at these markets, the Santa rally appears to be taking hold. We had the S&P, as I say, rising for a fourth straight day yesterday, although these are slim volumes and it was concentrated in tech. We've got futures pointing an ever so small amount lower on S&P E-minis this morning. Same for Nasdaq futures, and we're flat to the downside in Europe as well. But some gains in the Asia session already, although it has to be said you've got a holiday in the Philippines and partial trading elsewhere across the continent. But if we flip to the cross-asset picture, you can see here the 10-year Treasury yield at 4.1589. We have to account for that US GDP print that came out yesterday, not doing much to encourage bets on a near-term Fed cut. They now see traders 20% less than chance of a January move. Short-dated treasuries underperforming off the back of that, and then we had bonds bouncing later off the drop in consumer confidence. So the 10-year there at 4.15. The dollar's weakened to levels that we haven't seen since around September, weaker 0.2% in today's session. Gold at 4,500 a troy ounce, up 0.3% here. It's hit a fresh record. And copper is above the 12k a tonne mark here, smashed through that level for the first time yesterday. Now, just briefly, let's dive into those US GDP numbers that were released yesterday. You can see the economy grew 4.3% in the third quarter, the fastest in 2 years. But as I say, not doing too much to encourage bets on near-term Fed cuts. Let's check in on how Asia markets are faring. Min Min Lo's in Hong Kong with an update for us. Min Min.
Hey Lizzie, we are seeing marginal gains on the Asia-Pacific benchmark, up about 0.2%, but here you can see pretty mixed. The Nikkei and the Kospi in the decline here, possibly being dragged down by the firmer yen and the Korean won as well. But it's been a pretty slow news day. Volumes are thin because of the holiday, and of course we have, for example, Hong Kong, Singapore, Australia, New Zealand having truncated trading sessions ahead of Christmas. But flip the board, we take a look at the currency space because the Korean won has seen very huge moves, up by 1.7% against the dollar. That's after the Korean government said that an excessively weak won is not desirable, and also saying that FX markets are going to feel, quote, the great determination of the Korean government. So you see the big plunge in Korean won here. We've been seeing the won sliding over the past half a year or so against the dollar, about 8% weaker, but it looks like they are successful now in putting a floor to that slide, and that could set us up for a less volatile open into 2026. One of the things that the Korean government is doing is to try to tamp down the appetite from South Korean retail investors for overseas U.S. stocks, and they are creating more tax incentives to encourage more inflows back to onshore markets in Korea. Lizzie.
Min Min, thank you so much. Min Min Lo there out of Hong Kong, and we'll speak to Min Min again later in the hour. Well, joining us now for analysis on these markets is Ryan Lemand, CEO and co-founder of Neovision Wealth Management. Good to see you, Ryan. Thank you for making time for us. We're just looking back on the year that has been 2025. I think you've been underweight US equities this year, sceptical about how financial markets have handled AI. But as I say, we've just hit another fresh record on the S&P. So have you got any regrets looking back at the year?
Good morning, Lizzie, and good to be back. Thank you for having me. Well, back in January, almost 1 year ago, when I said on the show that we were underweight equities in the US, well, most people didn't understand why. We simply don't invest into overvalued, very new technologies And especially with all of the circular capital, circular investments that are happening within the Tech 7, we weren't comfortable with it. And actually, the year has confirmed we were right. If you look at the S&P 500, if you look at the performance of the S&P 500 over 2025, it has been one of the worst performance globally. If you compare it to emerging markets, you compare it to commodities, you compare it to multiple indices, it hasn't really performed exceptionally well. So unless you were really long this small basket of Tech 7, you wouldn't have done very well. I mean, even against the euro, it has made 7% only in 2016. Our model portfolio has made 31% year to date. So we're quite happy with our model portfolio, to be honest.
But doesn't the fact that some Mag 7 names have actually underperformed the S&P this year show that there is still room to run, that not all of the Mag 7 are trading at runaway valuations?
Absolutely. In the US, there are many companies that are really worthwhile to invest in. I mean, look at the small and mid caps. If you compare them to the valuations of the rest of the market, or the Tech 7, or even defensives, their values are really very, very low at the moment. Some of them are dividend paying, cash flow generating, so they are worth investing in. But it was a conscious decision really to stay away, because there are alternatives. When we had TINA, there is no alternative. Remember a few years back, yes, we had to. But today there are many, many alternatives that can provide us with very good value at very low risk. And while currency is not really a big concern, where currency can be hedged. However, we're starting to look back at defensive, small caps and mid caps, because I think with some stock picking, there's some value there.
OK, so where are the juicy returns if not in big tech, and what tweaks are you making to your portfolio construction from this year into 2026?
So our model portfolio will remain relatively the same. The 60-40 obviously is dying or is dead already. So the baseline for our portfolio today is gold. More than roughly 25% of our portfolio is gold. We've started adding silver recently. We've added copper a few months ago. So this is really the baseline of our portfolio. So this is the 40, if you will. And then from the stock perspective, we're looking more at emerging markets, Asia, so China, India. We're looking at Switzerland, European, in a very selective way. So this is basically where we are. On the fixed income side, we're more on the shorter term than the longer term, because we do believe that the longer term will be quite volatile until there's more clarity in the US. Let's not forget, in 2025, the US debt has grown by 6%, while GDP growth has been around 2%. So this makes it a bit volatile, I think, from a longer-term fixed income perspective.
OK, interesting. And I know that you like gold, but you're underweight US equities, and that will continue into 2026. What if the Fed doesn't cut as much as markets are expecting? What if Jay Powell tries to hold back the FOMC from cuts in the first half of next year, in the expectation that there'll be a dovish Fed chair in the second half of the year? What does that do to US equities? What does it do to gold?
So we do think that the Fed will halt in the next meeting. This is clear, especially in light of the latest GDP numbers. There's another factor that we have to bring in, which is Japan, because Japan, as we know, the carry trade has been one of the biggest drivers of financing margin trading in the US. So as Japan increases rates and the Fed holds rates, I think this will not be very positive for US equities in the first half of 2026. We do expect quite a bit of volatility, and we wouldn't exclude another April 2025 event in the first half of 2026.
Wow, OK. Well, I shall brace myself, Ryan. You mentioned Japan there, and of course we had our interview with the finance minister yesterday talking about how they have a free hand for currency intervention, but it's still just a verbal intervention at this stage. How far off do you expect that intervention to be to support the yen?
Well, I think the statement is very, very clear. There's no doubt about it. They will intervene. The yen has gone a bit too far for their comfort, I think, while they are increasing rates. I mean, Japan today, we haven't seen anything move on rates for the past 30 years. So that move is quite substantial from a capital movement across the world. So we do think that they will, as we said a few months back, we do expect the Bank of Japan to increase rates, and they have. We do expect them to intervene on the yen, and we do expect some big moves on the yen. So we are buyers of Japanese equities as we speak, and obviously we stay away from Japanese fixed income.
And just finally, focusing on the Middle East region, Ryan, and of course with the oil price in mind, what's your view on Saudi equities for the next year?
We've been buyers of UAE equities. Saudi, obviously, we stayed away because the performance wasn't there. Saudi Arabia is going what the UAE has gone through 15 or 20 years ago. So it's reflective in the Saudi equities. We are very cautiously looking at Saudi equities, and we do think there are starting to be some very good pockets to invest in. Saudi Arabia is going through some massive reforms, and this is what's happening on the Saudi equities is just a reflection of these reforms. But we do think there will be a bounce back eventually, and some very nice buying opportunities.
Okay, Ryan, always a pleasure. Ryan Lemand there, CEO and co-founder of Neovision Wealth Management. Thank you so much and happy holidays. Well, now for a look at some other stories we're following this morning. Nearly half a dozen tankers laden with crude have departed from Venezuela's coast despite increased pressure from the United States. Data from maritime intelligence firm CATL show that most of the tankers are headed to Washington, and at least half of them are chartered by Chevron. This comes as the Trump administration intensifies efforts to curb Caracas's oil revenue by targeting sanctioned vessels. Elsewhere, the US Supreme Court has refused to let President Trump deploy National Guard troops in Chicago. A majority of judges ruled that the administration failed to identify a source of authority that would allow the military to execute the laws. The move is a setback to Trump's drive to use the military in cities across the country, including New Orleans, where authorities have just deployed 350 troops. And a federal judge has upheld the Trump administration's plan to drastically raise H-1B visa application fees to $100,000. The ruling in Washington says that Congress gives the president broad statutory authority over the matter. It's a blow to the likes of Amazon, Apple, Microsoft and Meta. They're among the companies with the greatest number of immigrant employees on H-1B visas. Well, coming up on the programme, the US holds off on new tariffs on Chinese chips for now. We'll bring you all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London, where it's 5:14 a.m. Well, the US is holding off on new Chinese chip tariffs until at least mid-2027. That's despite accusing Beijing of engaging in unfair trade practices in the semiconductor sector. And we can get more now with our China correspondent, Min Min Lo, who joins us from Hong Kong. Min Min, just tell us more about this investigation into Chinese chips.
Yes, it has been close to a year in the making because if you recall, this was one of those probes that was launched in the final few weeks of Joe Biden's administration. The expectation was that President Trump would resolve it, and the U.S. Trade Representative Office was investigating the foundational chips that China produces. So these are chips not necessarily used for AI, but they're used for many different industries, from autos to medical devices to telecommunications. And the U.S. has found that China uses what it calls sweeping and aggressive non-market policies to create foreign dependence on its products in a way that was disadvantageous for U.S. commerce. Again, this is from the U.S. Trade Representative Office. And the decision from the U.S. is that they will impose no tariffs for now for the next 18 months. Starting from June of 2027, they will start imposing tariffs, and the rates will be announced at least a month before. So this is a clear signal that President Trump perhaps wants to stabilize the ties and maintain that trade truce, the hard-won trade truce that the two sides agreed on when President Xi and Trump met in South Korea in October, but still leaving himself that opening 1.5 years down the road, a bargaining chip perhaps to revisit when it comes time for U.S. and China to renegotiate the extension of the trade truce.
OK, so that's Washington's side. What's China's response been?
Well, obviously, no surprise that China is upset at this. We have the Chinese embassy in Washington hitting back at this and saying that this is an abuse of tariffs and saying that China reserves the right to take all necessary actions to protect its legitimate rights and interests. But given that the tariffs are not going to kick in until 1.5 years later, it's probably quite unlikely that China would retaliate in a significant way in the near future. Here you can see one of the statement from the embassy saying that weaponizing trade and tech issues will destabilize the global supply chain and will eventually backfire. But meanwhile, we know the U.S. yesterday announced the ban on foreign drones and drone parts. China did react to that and called the U.S. to withdraw that new rule, and again saying it will safeguard Chinese companies' interests, and it's accusing the U.S. of bullying Chinese companies.
Well, speaking of those companies, we've seen SMIC shares up in Hong Kong after raising some prices by 10%, Min Min. What does that show about the demand for their products and, more importantly, about the broader AI landscape?
Yeah, I mean, it's not surprised that SMIC has the power to raise its product prices because we have seen a burst of AI-related activity in China. You know, after the breakthrough by DeepSeek at the start of this year, towards the later end of the year, we saw a slew of these chips-related IPOs debuting in Shanghai, and SMIC remains one of the only foundries in China that is able to produce advanced nodes 7 nanometers or below. And we have the likes of companies like Huawei and Capricorn announcing already that they want to double or triple production of chips by next year. And some of these companies like Capricorn, Huawei, they design the chips and sell the chips, but they don't produce it themselves. They contract them out to manufacturers like SMIC. So not surprising that SMIC is experiencing close to full capacity or sometimes exceeding full capacity according to local media. So they're raising prices now, and of course investors are rewarding the company for the higher margins.
Yep, the shares up more than 3% right now. Min Min, good to see you again. Min Min Lo there, Bloomberg's China correspondent. Thank you. Well, coming up on the programme, we'll turn back to our region. A private jet carrying Libya's military chief of staff crashes in central Turkey, killing him and 7 others. We'll bring you the latest on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, Egypt has signed deals worth more than $1 billion with Chinese companies to set up 3 industrial projects in the Suez Canal economic zone. The projects include a major polyester and polymer complex, a tyre manufacturing facility, and a plant to produce healthcare products. Construction is expected to begin next year, with production starting between 2027 and 2028. Elsewhere in the region, South Africa's revised plan to restructure Eskom is facing pushback from creditors and foreign funders. The government now wants to split the state-owned power utility into separate units that all report to a single holding company rather than fully independent entities as originally planned. Analysts warn that the change could hamper Eskom's ability to finance new transmission lines. Elsewhere, Senegal has pushed back the closing date of a local currency bond sale worth more than $700 million by several days. No reason was given for the extension, which pushes the sale to close later this week. The country has been facing mounting financial pressure following the discovery of billions of dollars in previously undisclosed debt and recent credit rating downgrades. Now to one of our top stories in the region. A private jet carrying Libya's military chief of staff Mohammed Ali Ahmed al-Haddad has crashed in central Turkey, killing him and 7 others. Turkey's interior minister says that the wreckage of the Falcon 50 jet was found near the town of Haymana after it disappeared while flying from Ankara to Tripoli on Tuesday evening. We can get more now with Onur Ant, Bloomberg's managing editor for Middle East and North Africa. Onur, thank you for joining us. What do we actually know about this crash?
The jet carrying the Libyan delegation crashed shortly after its takeoff at about 8 p.m. local time from the Turkish capital, Ankara, killing all on board, including 5 members of the Libyan military delegation and 3 crew members. The plane notified air traffic control shortly after its takeoff that it had an electrical fault, and it requested an emergency landing. Preparations were underway at the Assenboa airport, where it had taken off from, while it was descending. And that's when the radio contact with the airplane was lost. It appears that the plane later crashed in the Haymana district in the Turkish capital, where the wreckage was found by Turkish authorities, and all on board were declared dead. The head of the Libyan delegation that was on that jet was the Libyan military chief of staff, Mohammed Ali Ahmed al-Haddad, who was a respected figure, not only a respected figure back in Tripoli, but he was also a key figure in UN-backed talks aimed at unifying Libya, which is currently divided between two rival governments, with one being in Tripoli in the country's west and the other in Benghazi in Libya's east.
And Onur, why was he visiting Turkey then?
Well, Libya and Turkey have very close military cooperation, and that's why the Libyan delegation was visiting Ankara. The government in the west, to which Mohammed Ali Ahmed al-Haddad worked for, has been supported by the Turkish government over the last 10 years, since the country has been divided between the two rival governments. As I said, that support has become more pronounced since 2019 and 20, when the administration in the east of the country was trying to overthrow the administration in Tripoli. Libya's administration is known to be operating various Turkish military equipment, including Turkish drones such as TB2, Bayraktar TB2, and Akıncı, the first of which is very well known in the region for its role in regional conflicts from Ukraine to all the way to Nagorno-Karabakh, where Azerbaijan and Armenia fought a 44-day war back in 2020. So that military cooperation and how to boost it was the gist of the meeting, was the objective of the meeting for which the Libyan delegation visited Ankara.
OK, really great to get that update from you. Thank you so much, Onur. And good to see you, Onur Ant there, Bloomberg's managing editor for the Middle East and North Africa. Checking in on these markets again, and of course it is low volumes right now, as you'd expect, heading into the Christmas holiday. But we did have the S&P rising for a fourth straight day yesterday. Can we make it a fifth? Doesn't look like it yet from the futures picture. S&P E-mini futures and Nasdaq futures both down about 0.1%. That could change, as it did yesterday, to be sure. We have Euro Stoxx 50 futures also flat to the downside right now. But if we also just flip over to the cross-asset picture and the Treasury picture there, of course, we are still digesting the data, a slew of US economic data, in fact, yesterday, including the GDP numbers, not doing too much to encourage Fed cut bets for next year. But you can see there the 10-year yield now only down a basis point at 4.1569. Also, just checking in on oil, it does appear to be holding on to this 5-day gain as traders weigh the escalating geopolitical tensions that we've been discussing against that backdrop of swelling inventories. And so you're looking here at Brent up 0.1% at $62 a barrel. Well, coming up, the US weighs a new push to rebuild Gaza as it tries to revive momentum in the ceasefire. That next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks climb after tech stocks led Wall Street to another record, with the S&P 500 climbing to a fresh high. Gold soars above $4,500 an ounce for the first time on escalating tensions in Venezuela and bets on more Fed rate cuts next year. And China's battery powerhouse CATL dominates its home turf and is eyeing global markets. European politics and Donald Trump could short-circuit its expansion plans. Those are your headlines. It's just gone 9:30 a.m. across the Emirates, 5:30 a.m. here in London. I'm Lizzie Burden in for Germana Versace. Happy Christmas Eve if you are celebrating. If you look at volumes right now, they do reflect the fact that we're just one sleep away from the Christmas holiday, and futures are pointing lower on both sides of the Atlantic this morning. But as I say, we did hit another fresh record on the S&P yesterday. Yes, it was slim volumes. Yes, it was led by tech. But perhaps we could hit another record today, even if that's not what the futures picture is suggesting right now. Flip the board over to the cross-asset picture, and of course we factor in the latest US GDP print out yesterday. The 10-year US Treasury yield pretty steady right now at 415.89. The Bloomberg dollar spot index, as you can see there, is weaker by 0.2%. It's been weakening to levels that we haven't seen since around September. Gold there at $4,495 a troy ounce, up 0.25%, and having hit another fresh record. And copper the same, over $12,000 a tonne at this point. It smashed through that level for the first time yesterday. If we also just dive into these US GDP numbers, an interesting one this. It came in at 4.3% in the third quarter, so the fastest in 2 years. And really, those numbers not doing that much to encourage bets on near-term Fed cuts. Traders now see a less than 20% chance of a January move. Off the back of this number, you had short-dated treasuries underperforming, but then bonds bouncing later on off the drop in consumer confidence. So all of that, the backdrop to today's session. Let's check in on how markets are faring in Asia, though. Min Lo is back in our Hong Kong studio with more. Min.
Hey Lizzie, we're taking a look at the currency markets because we're seeing a third day of dollar weakness here despite that better than expected GDP data out of the US. But we're focusing on the Korean won because it's gaining 1.7% against the greenback after the Korean government warned that an excessively weak won is not desirable. And timing pretty strategic as well, coming a day after the finance minister of Japan moved first with its strongest verbal intervention yet. And here you can see the yen is also extending gains against the dollar. The yuan as well, inching closer to the $7 per dollar mark. And so we continue to watch the currency space here. But I thought it would be good to also look back at the year and how Asian stocks has performed. And if you flip the board, you would see that Asian stocks so far this year, compared to US and Europe, which are the white and blue line, the Asian stocks have been outperforming for the first time since 2020. And it's been a stellar year, especially for the tech space. You look at China, the breakthroughs with DeepSeek, the tech-related IPOs later in the year, which saw really spectacular trading debuts in Shanghai. You flip the board, of course, we have NVIDIA's advancements in chips that really powered some of their Asian suppliers, the likes of SK Hynix and Samsung. That is boosting the Kospi. If you look at where we are, it is the best year since 1999, and I think this is the best, one of the best performing gauges globally as well. China and Asia Pacific best year since 2017. Lizzie?
Wow. OK. I feel like we've gone back to the 90s quite a lot recently when it comes to Asian markets in the past week. Min, good to see you again. Min Lo out of Hong Kong. Thank you. Well, this year has seen a series of rate cuts across major central banks around the world, but with many policymakers signalling that they're near or at the end of that cycle. What does 2026 have in store for central bank watchers like yours truly? MLive currency and rate strategist Ben Ram joins me now for more. Ben, am I going to have a quiet year in 2026? Why is the policy stance shifting towards a more neutral, even hawkish viewpoint next year?
Morning, Lizzie. That's absolutely right. We have seen the central banks in Australia and New Zealand kind of turn very hawkish over the past couple of weeks, and that is because of two factors primarily. One is that growth has been pretty resilient. Consumer spending has been robust. The labor markets are pretty tight as well, it turns out, much tighter than central banks were expecting around even earlier this year. And there is also the inflation picture. The inflation picture is kind of sticky. Gone are the days when we seem to be comfortable talking about 2% inflation. Now we are talking about 2.5%, if not 3% inflation in many of the economies. And that's the reason why central banks are quickly pivoting away from dovishness into hawkishness.
Now, you and I both know no central banker likes to hit the reverse button and admit a policy error. Which major central bank, then, is most likely to surprise us in 2026 and why?
Well, I think that, that award has to probably go to the Bank of Japan because they are behind the curve. If you look at their own projections for inflation, they are forecasting inflation to come in at 1.8% for the next fiscal year. And that is, never mind that realized inflation is running at close to 3% in Japan. And they are also expecting growth to be above trend next year as well. So if you put all those together in the Taylor rule equation, what you get is a recommended rate of 1.5%. So that means that they've got 75 basis points of rate hikes that they need to put through. Whether they will put that through or not is the big question. But there is no question that they are behind the curve in kind of fighting the inflation. And there are also other central banks that are likely to turn more hawkish as well.
Well, let's talk about the Fed, because the expectation then is, of course, that they might get a dovish Fed chair next. Why might that chair struggle to get the FOMC on board for deep rate cuts?
Well, the point is, the Fed is at 350 to 375 now. And if you look at how sticky core inflation has been, and how resilient the U.S. economy has been. We got the print yesterday, 4.3%, blowing out all estimates. So that, and the Fed expects the U.S. economy to go 2.3% next year. That's fully half a percentage point above what they were expecting in September. And 2.3%, even that is conservative. 2.3% would be well above trend. So you've got an economy growing well above trend. You've got core PCE that is hovering close to 3%. That means that there is just no wiggle room for the Fed to be cutting rates. And for the new incumbent, whoever they are required to be dovish by job description, as we know. But the question is whether they will be able to drive that consensus, and not all on the Fed Policy Committee may agree to cutting rates endlessly because of the factors that I mentioned of core PCE being sticky and resilient economic growth, which means that the Taylor rule rate is at 350.
OK, so the FOMC could be the guardrail on that dovishness from Trump's pick for Jerome Powell's replacement. Thank you so much for the roundup, Ben Ram. Good to see you there. Well, turning back to geopolitics now, and the US and its allies are renewing their push to hold a conference on Gaza reconstruction. The conference would be part of a broader effort to advance President Donald Trump's peace plan, and that includes the creation of a board of peace and an international stabilisation force. I'm pleased to say joining us for more is Julia Roknifard, senior lecturer at Taylor's University, Malaysia School of Law and Governance. Thank you for making time for us, Julia, this morning. And I do want to start in Gaza. We're calling this a ceasefire, but as you know, we've seen strikes and ambushes continuing really almost from day one. At what point does the word ceasefire lose all meaning?
It depends on how we interpret it, because indeed it has been ceasefire in the name only, we can say, with over 700 violations, over 400 people dead since the ceasefire, so-called, was announced. So at this point, we can actually conclude that ceasefire is not being observed. And even though Israeli forces retrieved by the agreed line, they still continue incursions into Gaza. People continue dying. As it was agreed, according to the phase one of the ceasefire, the necessary aid is not delivered to the degree that it should be there. Maybe there's no famine, but we still get the news children dying of hypothermia because the tents and other necessary supplies are not delivered in there. So it looks like the parties to this agreement, especially those that take Israeli side of this, would like to keep appearances, maybe not to attend to this once again and not to renegotiate the terms of it. But it has not really been there.
Yeah, well, but phase two was always going to be the hardest part, wasn't it? Was it ever realistic to expect Israel to withdraw fully once Hamas had basically already handed over most of its leverage?
Yes, indeed. That was the question: if and when Hamas is going to hand over all the hostages and also the bodies of the hostages, what it is going to be left with as a leverage. There is one body that still remains in there, and I think there is some of understanding that it's very hard to retrieve the bodies up to the very last one, and now there is a moment to get to the phase two. But if there was no really intention on the Israeli side to proceed with the phase two, which many experts doubted, and at the current state of affairs, it also doesn't seem that Israel would like to give up any of its superiority on the ground and in Gaza, and it has its own plan in mind. And you would understand the hesitance of the international actors. Why should we start the rebuilding effort, which is going to be hectic, but it is possible, if it is going to be destroyed once again by Israel?
And you wonder how meaningful this reconstruction conference can be when there's still no clarity on governance, the Board of Peace. But my question to you is, where you say about keeping up appearances, who do you actually expect to be committing to joining this stabilisation force?
At first, we've heard the voices of the Muslim countries, like the Muslim majority countries like Turkey, Pakistan, Indonesia. And Indonesia, in fact, was supposed to heard the claims that it was supposed to make up the majority of this stabilization force. But if you think about it, who would actually want to send their troops on the ground there, where they have to stand in between the two parties that are still in the state of war, as we just discussed? There's no actually a permanent or a stable ceasefire. They are supposed to stand against a very powerful adversary, which is Israel. But also, would they be prepared to shoot at the Palestinian groups if push comes to shove? So I think that's what is deterring the countries from sending their troops, and also potential political backlash at home that they might face. Even though maybe we are not talking about all the democratic countries that would be potentially sending the troops, nevertheless, they should still consider how public at home is going to look at that, putting their own troops, putting their own people in such a precarious position.
Well, yeah, elsewhere, we've had the Israeli Prime Minister Benjamin Netanyahu, of course, also warning Iran of a very fierce response if it attacks Israel. Do you read that as deterrence, or do you read it actually as code for preparation for another regional escalation?
It might be testing the water to see what kind of conditions Israel finds itself right now in, because in the first phase, in the first stage of the escalation between Israel and Iran, I'm talking about 12-day war, how Donald Trump named it, there was a potential and high chances of the U.S. involvement into the conflict and from facilitation of the Israeli effort. Right now, I don't think Donald Trump would be interested in that. And there were signals from Washington, although we are yet to see what they're going to discuss with Netanyahu on 29th, when they're meeting in the United States. But for now, it doesn't seem possible for Netanyahu to persuade Donald Trump for the U.S. to participate in this once again. Because as far as the U.S. concerned, and as far as their perception thread goes on the side of the Trump administration, the nuclear program of Iran was undermined, if not destroyed. And now there is no reason to be concerned about the missile program. That's something that is currently of Israel's concern, with Iran potentially. We've heard some controversial news about Iran testing some of its missiles, which on the side of Iran is also more or less a deterrence effort than banging the drums of war and signaling that it's ready to attack Israel. His position has always been pretty much defensive, just to signal that Iran is ready to rebuild its missile potential, which it knows as its inalienable right, even more than in the situation when we talk about the nuclear program. So for now, for Israel, probably it's testing the waters. For Iran, signaling that this deterring, its usual strategy, its usual rhetoric of deterrence, that do not attack us once again. Because For the past months, there's been so much talk that it's not a matter of if it is going to happen again, if Israel attacks Iran once again, but when. And I don't think now is the time unless there's going to be some gross miscalculation.
OK. Julia, really great to get your insights this morning. We thank you so much. Julia Roknifard there, Senior Lecturer at Taylor's University, Malaysia School of Law and Governance. Well, coming up, Turkey hikes its minimum wage by 27% for 2026. More on that next. This is Bloomberg. Now, Turkey's raising its minimum wage by 27% for next year, a move that's broadly in line with inflation forecasts as policymakers try to keep price growth in check. More than a third of Turkish workers earn the minimum wage, which is also seen as a reference point for the wider salary agreements in the private sector. Let's get more detail now with Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. He's back. Onur, just talk us through how this wage hike fits with the government's broader effort to bring down inflation and stabilising the economy.
Well, the Turkish inflation has been quite rampant for much of the last 5 years, mainly due to a monetary policy mix that at times appear to have been affected by electoral priorities held by President Recep Tayyip Erdogan, who was facing tough competition from Turkish opposition, both in presidential elections and local elections. But after peaking at about 80% a couple of years ago, there has been a change of guard in both Turkish Central Bank and Turkish Finance Ministry, and inflation has been coming down ever since. So it's seen at ending the year 2026 at about 25%. And given that, 27% of increase to the minimum wage is broadly in line with expectations. It brings the Turkish minimum wage to just about $650 in dollar terms. And that's, although it's a bit higher than the sort of historic average, if you look at the last 20 years, it is still very much in line with expectations and reinforces the view that the Turkish government is looking at slowing the inflation to somewhere between 25% and 15% without pushing the economy into a major recession or a sudden stop.
But does it not just inevitably feed more inflation if businesses have to hike prices to cover the cost? How are businesses and investors likely to read this decision, Onur?
Well, I think both businesses and investors are aware that the Turkish Central Bank's own estimate of where the inflation might be end of next year, somewhere around between 13 and 19%, is a bit ambitious. So this is also in line with their expectations that inflation will be slowing, maybe not as fast as the central bank hopes it might, but it's still in that range where everybody seems to be happy with. But as you said, especially for businesses, this sets a benchmark for the rest of the private sector to decide where salary increases will be next year. And therefore, 27%, I think, is a figure, a consensus that both businesses and investors and at least part of the labor unions can live with. But obviously, it is important to note that a big part of Turkish labor unions are against this increase. They think it's way too low. And at least one labor union contends that the actual amount of money that a family of four needs to make to be not to be under the poverty line is about 4 times higher than the current minimum wage.
OK, so you've got to see it in the Turkish context. Onur, thank you so much for the context there. Onur Ant, Bloomberg's managing editor for the Middle East and Africa. Well, coming up, we're going to turn to China, where the EV battery giant CATL is looking for new markets after dominating on its home turf. We'll bring you that story next. This is Bloomberg. Turning to our big take now, the world's biggest EV battery maker, CATL, powered 1 in 3 cars sold this year. That's according to data from the South Korea-based SNE Research. But as growth slows in China, CATL is now looking abroad to boost its business. Bloomberg's Asia Transport reporter Linda Liu joins us with more. Morning, Linda. So you've got CATL trying to replicate its success at home in overseas markets. How's it doing that, and what road bumps does it face ahead?
Yeah, so CATL is hoping to continue its breakneck growth in the overseas market now that EV sales, along with car sales in general in China, have slowed. So you're seeing them really pushing to set up production in Europe. They've built 2 factories, one in Germany, one in Hungary. They're building another one in Spain with Stellantis, and they're also looking to do licensing deals with US automakers such as Ford. So really, it's about finding new opportunities overseas, but it's facing a lot of geopolitical challenges. So in the US, it can't directly kind of build its own factory because of these barriers to entry. And in Europe, it's facing, efficiency and cost challenges in its production facilities.
And how is it likely to handle the uneven EV demand, if we put it that way, across the world?
Yeah, CATL is betting on, even though in the short term, EV demand is a bit uneven. You're seeing that in Europe, where the subsidy support for purchases are being scaled back. A timeline for phasing out internal combustion engine vehicles was scrapped recently. So CATL really has a big challenge in sustaining this growth. But it sees itself in the long term as, the premier battery provider to all of its automaking partners. And it thinks that by, improving efficiencies, bringing the cost of batteries down, and helping the manufacturers launch more and more affordable EVs is the way to really keep this market growing, even if support and subsidies are not as strong as before.
OK, Linda Liu with our big take, and you can read it on the terminal. It is a fabulous read, so I recommend you do. Bloomberg's Asia Transport reporter there, we thank you. Just checking in on these markets at the end of this hour, and we have them futures pointing ever so slightly lower on both sides of the Atlantic this morning. We have seen some gains in the Asia session, but we are watching lots of markets only partially open today. The Philippines already off on holiday because it is, of course, one sleep till Christmas. That's it for Horizons Middle East and Africa. I'm Lizzie Burden. Stay with us for Daybreak Europe. Oliver Crooks coming up next. This is Bloomberg.